You were 31 years old, working late in a mid-sized accounting firm in Phoenix, Arizona, reconciling quarterly reports for a chain of commercial laundromats. The work is tedious but clean. You are good at finding what doesn't belong, a number slightly off, a decimal in the wrong place, a pattern that breaks its own rhythm. Your supervisor calls it a gift. You call it pattern recognition. It pays $62,000 a year and asks nothing dangerous of you. Then, a partner at the firm pulls you into a private meeting and explains that one of the firm's largest clients needs a dedicated accountant, someone discreet, someone sharp. The money is significant, 3 times your current salary plus expenses. You ask who the client is. He doesn't answer directly. He slides a non-disclosure agreement across the table and tells you to read it carefully before you ask any more questions. You read it. You sign it. You tell yourself it's a pharmaceutical distribution company because that's what the paperwork says, and for the first 3 months, nothing contradicts that. Then you see the cash flow. No pharmaceutical company moves money the way this one does. The deposits are structured in increments just below federal reporting thresholds, cycling through 17 shell companies across 4 countries, surfacing clean in a holding company registered in Luxembourg. You sit with the numbers for 2 days before you understand what you're looking at. On the 3rd day, a man named Rodrigo visits your office. He is calm, well-dressed, and speaks to you like a doctor delivering a diagnosis. He tells you that you already know too much to walk away and not enough to be safe. He tells you that your value to them is precision and silence, and that both will be rewarded. He places a folder on your desk with photographs, your apartment, your car, your mother's house in Tucson. He doesn't threaten you directly. He doesn't have to. You understand the architecture of what he's describing. You nod. He leaves. You stare at your monitor for a long time. Then you get back to work. What they have is extraordinary in its complexity and terrifying in its scale. You are managing the financial concealment of somewhere between $400 and $600 million annually. The number fluctuates based on operational cycles you're not allowed to ask about. The money moves through real estate acquisitions in Miami, Houston, and Los Angeles, through restaurant groups, through a network of car dealerships in the Southwest, through an agricultural export company in Sinaloa, and through several legitimate businesses so thoroughly integrated with the illegal capital that separating them would require dismantling everything. That's by design. You are the person who maintains that design. Your job is not to hide the money. Your job is to make the money indistinguishable from money that was never hidden. There is a difference, and it matters enormously. You build financial narratives, revenue projections, depreciation schedules, payroll structures that explain the existence of cash without revealing its origin. You are, in the most literal sense, an author of fiction written in numbers. Within the first year, you identify 3 significant vulnerabilities in their existing structure. A restaurant group in Dallas is over-reporting revenue by a margin that would trigger an IRS audit within 18 months. A real estate LLC in Nevada has a beneficial ownership chain that traces too easily back to a named individual currently under federal investigation for separate charges. A payroll system for a construction company in Texas is using Social Security numbers that were issued to deceased individuals, which is a pattern federal investigators specifically screen for. You correct all 3 without being asked. Rodrigo learns of this through whoever monitors your work, and the following Monday, a wire transfer arrives in an account you didn't know you had. The amount is $240,000. You don't touch it for 6 weeks. Eventually, you do. You tell yourself this is survival. You tell yourself the alternative is worse. You are not entirely wrong about either of these things, but you know that justification and truth are not the same, and the gap between them widens every quarter. By the end of the 2nd year, you understand the full geography of the operation. There are 4 primary financial centers, one in Mexico, one in Miami, one channeling through European banking institutions, and one running through cryptocurrency conversion nodes that you manage through a secured terminal in a rented office with no exterior signage. Each center has its own logic and its own risks. The crypto layer is the newest and the most volatile.
Regulatory attention on digital assets is accelerating faster than most people in the organization anticipated, and you are the one who has to anticipate it for them. You draft a 40-page internal risk assessment recommending a reduction in crypto exposure and a corresponding expansion of the real estate pipeline into 3 new markets. The recommendation is approved. You have, without meaning to, become indispensable. Indispensable is a dangerous thing to be. You begin to understand that your value is also your cage. They don't need to threaten you because they don't need to. You know where everything is. You are the only person who holds the complete map. Senior people within the organization know pieces. Rodrigo knows the real estate layer. A man called El Contador Viejo knows the Mexican banking relationships. A woman in Luxembourg named Aunt Kay manages the European flows. But none of them hold the full picture. You do. Which means if you disappear, the machine breaks, which means they will do whatever is necessary to prevent you from disappearing in any direction other than the one they choose. There is a DEA analyst named Carver that begins appearing in financial subpoenas served to 2 of the shell companies in year 3. You track the subpoenas through legitimate legal discovery processes and identify the pattern of his investigation before it reaches critical proximity. He is working from the outside in, following the real estate chain. He is 18 months away from the Luxembourg account if he maintains his current trajectory. You do not tell Rodrigo this immediately. You spend 4 days deciding what to do with the information. You restructure the Luxembourg exposure on your own authority, migrating assets through a new intermediary in Liechtenstein and dissolving 3 of the most exposed LLCs through a legal process that looks like routine business wind-down. When you finally brief Rodrigo, the problem is already largely solved. He looks at you with something that might be respect and might be recalibration. You can't tell which frightens you more. What you know and what they do not fully appreciate is that you have been quietly maintaining a parallel set of records, not as leverage, you tell yourself, as insurance, as documentation of your own coercion. But you know the truth is more complicated than that. The records are detailed enough that they could dismantle the organization from the top down. They are also detailed enough that they could end your freedom permanently if found. You've encrypted them and distributed fragments across 3 separate storage systems using a segmentation protocol that requires your active participation to reassemble. If you are killed, the fragments are inaccessible. If you are arrested, you have something to negotiate with. It is the most dangerous thing you have ever done, and you completed it in 12 quiet days without anyone noticing. You are now 4 years into this role. You manage a financial architecture that spans 11 countries, 43 incorporated entities, and approximately $2 billion in cumulative laundered assets. You have attended meetings in Guadalajara, in Zurich, in a private residence in the Florida Keys, where men discussed logistics in voices so calm they could have been talking about weather patterns. You have eaten dinner at those meetings. You have shaken hands and answered questions and performed the ordinary social functions of professional life in rooms where extraordinary violence was either the subtext or the recent history. You have compartmentalized this with a discipline that disturbs you when you stop to examine it. The question you return to most often is not whether you can get out. You have modeled that problem exhaustively. The question is whether there is any version of getting out that does not require destroying everything, including yourself. The federal exposure alone would require years of cooperation, testimony, witness protection, and the permanent erasure of the life you built before Phoenix. The cartel's tolerance for defection is not a variable you can model, because it is not rational, it is absolute. And so you continue. You open your laptop on a Monday morning. There are 14 pending items requiring your attention. A new real estate acquisition in Atlanta needs a clean acquisition structure. A cryptocurrency wallet linked to a distribution account in Chicago has been flagged by an exchange's internal compliance system and needs to be abandoned and replaced. A discrepancy of $3.4 million has appeared in the quarterly reconciliation for the restaurant group, and you need to find it before anyone else does. You begin with the discrepancy. You always begin with what doesn't belong. That part, at least, has not changed. The numbers are still just numbers. The patterns are still patterns. What has changed is what they mean and what it costs you every morning to sit down and read them again.